Welcome to Beyond Revenue, how market share unlocks value and competitive moats. Today, we're diving deep into why market share is more than just a number. It's the ultimate metric for understanding a company's true position and its competitive edge. Market share isn't just about how much revenue a company generates. It's about its competitive standing, its growth potential, and its long-term viability in the market. This metric reflects a company's competitive position. It reveals who truly holds the power and influence within an industry. Investors and analysts meticulously study market share to gain deep insights into a company's market dominance, its potential for future expansion, and its ability to sustain that growth over time. It's a critical indicator of health and competitive strength. Simply put, the bigger a company's slice of the market pie, the stronger its influence and ability to shape industry trends. First, let's establish a clear understanding of what market share truly means. Imagine the entire market for a specific product or service as a single, large pie. Each company operating within that market takes a slice, representing their portion of the total sales. The formula for market share is straightforward. It's a company's total revenue divided by the total revenue of the entire industry or market segment it operates within, expressed as a percentage. The primary goal for any company is to continuously strive to capture a bigger slice of this pie over time, while simultaneously defending their existing share from competitors. Market share isn't a monolithic concept. It comes in various forms, each offering a unique perspective on a company's standing. Absolute market share refers to a company's total sales revenue as a percentage of the entire industry's revenue. It's the most common and straightforward measure. Relative market share compares a company's sales to that of its largest competitor, providing insight into its competitive strength within the leading players. Addressable market share focuses on the portion of a specific niche or target market that a company has captured, offering a more granular view. Voice share measures a company's presence in media, marketing, and public discourse, reflecting its share of the conversation. Mind share signifies a company's mental dominance, where its brand is the first that comes to mind for consumers in a particular category, like Coke for soda. For investors, market share is far more than an academic concept. It's a critical indicator of long-term value. A high market share often signals the presence of a competitive moat, a sustainable advantage that protects a company from rivals. This could be due to network effects, economies of scale, or strong brand loyalty, all of which are difficult for competitors to replicate. Companies with larger market shares often enjoy significant pricing power, meaning they can set prices without immediately losing customers to competitors. They also benefit from lower customer acquisition costs, as their brand recognition and dominance naturally attract new clients. Furthermore, a larger scale allows for greater economies of scale, reducing per-unit costs and boosting profitability. Understanding how investors scrutinize market share data can provide valuable insights into its strategic importance. Investors don't just look at the raw market share percentage. They consider it within the broader market context. Is the market growing or shrinking? What's the competitive intensity? Crucially, they also evaluate customer retention rates. A high market share is less impressive if customers are constantly churning. Beyond traditional financial statements, savvy investors increasingly turn to alternative data sources to gain a more nuanced and real-time understanding of market share dynamics. Credit card transaction data offers direct insight into consumer spending habits, providing a granular view of market share changes in various sectors. For digital companies, web scraping and app usage data are invaluable for tracking user engagement and market penetration. Satellite imagery can reveal activity levels in physical industries like retail or oil and gas. Meanwhile, analyzing social media sentiment helps investors gauge brand strength and public perception, both crucial elements of market share. Despite its importance, accurately measuring market share isn't always straightforward. Several challenges can complicate the process. One significant hurdle is obtaining reliable data for private companies, which aren't required to disclose their financial performance. Defining the exact boundaries of a market can also be subjective, leading to different interpretations of market share. Furthermore, data discrepancies can arise from various sources, including different reporting standards, varying data collection methodologies, and even competitive intelligence gathering, requiring careful analysis and triangulation. Let's consider two hypothetical case studies to illustrate how market share plays out in different scenarios. Market share is more than just an operational metric. It's a fundamental driver of a company's valuation. The landscape of market share analysis is constantly evolving, thanks to rapid advancements in technology. Artificial intelligence and advanced data analytics are revolutionizing how investors measure and interpret market share. AI can process vast amounts of unstructured data, identify subtle trends, and even predict future shifts in market dominance. Beyond the numbers and charts, market share grants a company a profound, often unspoken power over its competitors and customers. Companies with a high market share often wield significant influence. They can effectively shape pricing trends, dictate industry standards, and even sway regulatory decisions in their favor, creating a formidable barrier to entry for smaller players. From a customer psychology perspective, people inherently trust leaders. A high market share signals reliability, quality, and a proven track record, making it easier for market leaders to attract and retain customers. In competitive landscapes, smaller players often find themselves in a reactive position, compelled to follow the strategic moves of market leaders to avoid being left behind. This further reinforces the dominance of high market share companies. In conclusion, market share is a multifaceted and powerful metric, far beyond simple revenue figures. It's a key indicator of competitive strength, future growth, and long-term value for investors. Please remember, this video is for educational purposes only and not financial advice. Always consult with a qualified financial professional before making investment decisions.